And Mike, let's just start with you, kind of winnowing the haves from the have-nots on who's going to double down and make sure that they're continuing dividends, that they're continuing buybacks, right?
Sure. I mean, a company like Pepsi is really not at the center, I don't think, of this debate in terms of having a stressed balance sheet. Obviously, very good cash flow. It's a grocery company plus beverages, right? So I don't think that's the kind of company where you're going to see it to be a kind of a pins and needles kind of decision on the company's part about whether to keep returning cash to shareholders. I do think we're going to have an earnings season, and a lot of it is going to play out this morning, of companies that have already been assumed to be very stable and resilient by the market, and their stocks have held up well, like a Pepsi, like the pharmaceutical companies, and to see if that's already all priced in, and the results don't necessarily have any incremental suspense in them. Now, the other thing is the industrials like 3M and Caterpillar, where the stocks are well off their highs if you go back a couple of years, and the question is, what do they see at all in the way of demand, and can they preserve their dividends? And you mentioned 3M saying that's going to remain a priority. That strikes me as news in this environment, even though 3M is not as cyclical and industrial as a lot of others.
Sarat, what do you think as you start to kind of sort through what we're hearing on the earnings front?
So I think it's interesting. Mike brought up a really good point. When you look at a Pepsi, 7% growth in the foods and snacks, and that's something that I think was built in. Here's a company that's going to do really well in a shelter-at-home environment. And what I'm looking for Pepsi to do is to say, how are we going to grow? They're the behemoth in snacks, and I think this is an opportunity to own a high-quality company going forward, and I'm going to look to see what other brand segments they're going to expand in. Now, going to a 3M and going to CAT, they're very different. We haven't really heard from industrial companies yet. We've done the financials, we've got some staples, and I think, for example, CAT's got 12% of its business in oil and gas. It's heavily focused in China. What is infrastructure doing? I think, CAT's down about 20% year to date. This will be interesting to see how they're going to use their balance sheet. And it's a duration, Becky, at this point. What is the duration of the slowdown? And then if and when we get back. So how do companies like CAT, 3M preserve their balance sheets, keep their dividends, and also spend money on R&D? You mentioned CapEx. A lot of them are cutting CapEx. But, I think the winners here are going to be companies that are going to be able to do not just keep their balance sheet, but also increase what they're spending in R&D.
Hey, Sarat, on that front, the duration is very important, and maybe the news from Caterpillar today that many of its operations are back up and running, even the ones that they had shuttered at some point. Maybe that's the news that you take away from this press release too.
Yeah, no, that's a really good point, because what's happening here is, this is globalization in play. A CAT has businesses all over the world, and while we're very focused here in the U.S. as to when we get back, other countries are starting to get back now, and if they're seeing global demand, and yeah, it's going to be fits and starts, but that allows us as investors to kind of see, okay, what are pieces of the world that are opening up, what industries are opening up, and if CAT, 3M, others like that. 3M, for example, is in the autos, it's in the chemicals, it's in the consumer business, it's a global company. So we're going to get really a perspective there as to what's going to happen. And then, it's very hard at this point to base valuation on this, because we don't know what earnings are going to be. And I mean, even when a Pepsi pulls guidance, that's going to be difficulty. So this is where we really have to cut through and say, I want to own these companies for the next 3 to 5 years. Who's got the management team? Who's got the balance sheet? And who's really got the strategic vision to say, we're going to get stronger, but it's going to be tough for the next couple of quarters. And that could be till December. It could be the first quarter next year. There's so many things going on. And I think this is where we as investors have to parse through all this information and kind of make really good decisions.